Happy Tuesday. Welcome back to Tip Tuesday, everybody. Great to see you as always, Ryan.
Great to be back. Happy Tuesday,
Yeah.
everyone.
And so we want to dispel the myth that you need 20% down to buy a home. You don't. So, Ryan, let's educate everybody today on really what is required as a down payment.
Yeah, it's what's called the down payment myth, and in my 20 years in the mortgage business, the misconception is really just as prevalent as ever. Basically what it is, it's the idea to purchase the home, you need to put 20% down, as you said. But, this was true at one point, but that was in the 50s and 60s, and at the time, banks wanted protection in the case of default, really foreclosures. And having 20% equity in the house when they closed ensures that, the bank, if they had to take the home over, could resell without a loss with that much equity. But over time, banks realized that many homeowners didn't have 20% down, especially as value started increasing. So to lower the down payment requirement while still protecting banks from default, private mortgage insurance was born, or PMI. So PMI does exactly what the name implies. It provides insurance to the issuers of mortgages, banks, just in case of foreclosure. So this protects the banks from losses, which allows less than 20% down to be available. But, because 20% down was needed for so long, and this has been passed down from grandparents to parents to first-time home buyers nowadays, some of them are still believing that 20% down is needed. Even my brother-in-law, who knows I'm in the industry, thought that before he bought, and it was holding him up from buying. That was kicking myself in the butt because I didn't mention it more to him. But, with mortgage insurance now, that's not the case. You don't need that 20% down anymore. So, you could get a conventional loan with as little as 3% down, FHA with 3.5%, and even VA with zero down, and there's even grant programs to help with this down payment. So even our own program we mentioned once on Tip Tuesday, the Powerhouse 100, it's zero down. That's a great program. So, there's a lot of low to zero down payment options out there. So don't believe the myth.
That's great. And Ryan, once you get to a certain amount of equity in the home, if you are paying private mortgage insurance, that actually comes off of your loan amount, correct?
Yes, that's correct. Yeah, you have the ability, once you have 20% or 22% equity, you can get it removed. Either you can request it to be removed or refinance it. That there's a lot of options.
Fantastic information, you guys. So we're your resource if you have any questions. So thank you as always, you guys. Great to see you. See you next week.
Bye, everyone.
Bye.